Today's Friday, November the 14th, 2025. We got gold finishing up the day at about $4,080 and silver at over 50 at $50.60. And given that, I wanted to recap our gold and silver valuation metrics and go over today's spotlight piece in the Libertad series, the 2016. Stay tuned. I wanted to start today's conversation by resurfacing a topic I brought up on a sequence of videos. Those videos are about 2 months old now at this juncture, and I'll put the links to those videos in the description for those that want to view all that detail. And I kind of wanted to consolidate those views by going over essentially gold and silver valuation metrics. And there's 3 of them I want to highlight. There's probably many more you could come up with, but I feel like these 3 are the strongest to kind of give us the determination of if gold and silver are overpriced or underpriced. And so basically, this is kind of a recap of that framework. And so the first metric I want to talk about that I discussed previously is 1980 was the previous secular bull market peak for gold and silver. And so if we wanted to reprice the nominal prices of that era, adjusting for the growth in money supply, this is kind of the range we're looking at with, and I'll discuss shortly, this is not a static number. This number is only going to shift upwards as the M2 money supply continues to increase. And at today's prices, and there's a range here specifically because it was a parabolic blow off top in 1980. So in that last month, this is kind of the range of the valuation. If you standardize that gold top, it was around $850 in 1980 for gold. That is equivalent when we adjust for the M2 money supply to $7,670 in a range up to $11,050 in today's dollars. And by that same methodology for silver, we have a range of $429 per ounce all the way up to $647 per ounce. And these are basically the modern equivalents of scaling that 1980 blow off top and that month where it peaked by the M2 money supply. And so basically what do I mean by scaling those prices by the M2 money supply? Essentially, the equation to that is we take what today's M2 money supply is, and we divide it by what that figure was of January of 1980 when gold and silver peaked. And that ratio is essentially about a 13. And so that ratio, we take the 13 and multiply it by what was the peak of gold in 1980, it was 850, but I put a range, like as I said, it was a blow off top. It happened in a matter of days. So this was that range of pricing in that matter of days. That is why I provided a range. And then same thing for silver. It peaked at 49.45, and I show the lower bound, which is what that range was within that final month when it peaked. And that's essentially lets us know, if we adjust for that money supply, that's kind of what gold looks like today. A couple of things to bear in mind. One might say, why M2 money supply? Well, I just wanted to provide one type of metric because one could say you could use the monetary base, the M0 money supply. You could use that. And so the other nuance is it's a fluid metric. If looking back at basically that multiplier, a year from now, you'll be using today, T plus 1 year out, M2 money supply divided by the January 1980 money supply. So that 13 is only going to grow larger as time elapses. Imagine your money supply grows 10% from this year to the next. That's really going to push out these ranges for gold like over 1,000 higher easily. So it is not a static metric. This one does shift. As M2 money supply grows, the multiplier is going to be a larger number. So keep that in mind. That's metric 1. Metric 2 we've talked about on a separate video is the gold-silver ratio. Essentially, in the final parabolic peak in a secular gold-silver markets, silver aggressively starts to outperform gold, and the ratio ultimately converges to 15 to 1. And like I said, I'm providing this range there of 15 to 16 to 1 because that parabolic move, there was a lot of price surging happening in just a couple of weeks. And because of that, I want to kind of say the range is 15 to 1 to 16 to 1 to accommodate for that. Basically, when it starts to cross into this territory, it's kind of your signal like, hey, things are getting out of whack. Maybe you have too many Libertads. Maybe I have too many American Silver Eagles. Maybe I have too many ETFs. And you start selling. You don't want to be overweight and overexposed. So this one is a very basic metric, how it's calculated, the gold-silver ratio. You have what is the gold price per ounce, and you divide that by the silver price per ounce, and that essentially gives you the gold-silver ratio, what the number is. And as I mentioned, 1980 blow off top, it was a very quick, steep collapse to 15 to 1. And so that's our second metric. And then finally, the third metric that I like to focus in on is the Dow to gold ratio metric. And this one essentially, I'm providing a range again just because it was a parabolic move there at the end of 1980, in the beginning of 1980, that is, where it surged toward a 1-to-1 ratio. And so basically, what that means is you take what is the Dow Jones index price divided by the gold price per ounce, and that guy kind of guides you towards the peak was a 1, and it shot down quickly. There's a caveat here. So I posted this chart here that I found on the internet, and there's a lot of folks that have brought this chart up on social media and shared it. And what you're seeing in that graphic on the right side after around 1920, they're trying to project, infer that we could potentially have a megaphone pattern of the Dow to gold ratio. It's essentially every time the Dow peaked versus gold, which is basically like your dot-com boom in the year 2000, and then in the 1960s, and then basically the late 20s, right before the Great Depression, the Dow to gold ratio, each new secular Dow bull market has rendered a higher high in terms of Dow gold ratio. And on the bottom rail, so that was the top red line in that megaphone. On the bottom rail, looks to be outlined by two trend lines down there, a red one and the black one. It's showing what in the prior two gold peaks, the price of gold outpaced the Dow gold, the price of the Dow Jones, and so it is inferring that there's a potential, a chance to go below a 1. But I mean, this is inference. This has not happened before, so I still stick to the 1-to-1 as being kind of like, hey, things are potentially being quite a bit overvalued here. Yes, it can go below 1. We've never seen a precedent for it since the Federal Reserve was created in 1930, but not something you want to bet highly on or be leveraged into such a conclusion. So those are essentially the three metrics that I have showcased in the past in videos about 2 months old. And I will talk about these as we go over more coins and discuss coins, and just to give you an idea, as the price of the coins are going up, as the price of gold and silver, which our numismatic pieces are anchored to, we kind of just always want to have that frame of reference of are gold and silver overvalued? Or are they undervalued? And this lets us keep track of that. So I will be tracking these and sharing where we're at with each of these as time goes on. And yeah, the one question you viewers might say is, hey, but I bet you there's a bunch of other metrics. And certainly there are. There was a video where I talked about how I had tried to get the attention of human resources at the companies I worked for. I've even written a white paper for one of my prior employers, essentially trying to showcase why our 401k options should give us some exposure against inflation by having some exposure to gold and silver ETFs or mining ETFs, but was always rejected. That went nowhere. And I kind of, at this point, at this juncture in my career, and at this point in my investing journey, it's not something I'm going to pursue any further. I feel like I would contaminate that signal. I feel at some point in the future, 401ks of companies, I don't think there's many out there. Bullion Cat actually told me his employer offers such exposure. I find that to be a rarity because I have not heard of any other examples, but it is not common. So I would anticipate at some time in the future, if my employer or the employer of my peers are then offered funds with exposure to gold and silver, I'm going to start thinking, hey, we might be near the last couple innings of this secular bull market. So, and you could just think the list goes on. You could come up with different metrics. I even talked about you don't have to look at the M2 money supply. You could look at the M0 money supply, just a different flavor of the same type of metric. But I think these three are very well established and they're very good benchmarks for us to monitor. So it goes without saying that in terms of those metrics, we're nowhere near the highs yet. Gold silver ratio, it's at over 80. Is right now it's at 80.63. And our Dow Jones to gold ratio, it's at 11.55. So we do have a ways to go before we can consider, hey, maybe I should stop buying Libertads. Maybe things are getting out of hand. And who knows what the price of Libertads will be near the peak, given how scarce they are. And as we start having the masses start to collect, and as I mentioned in my own journey, you always think your flavor is the best flavor. So, being an American, you're going to say, your new collectors, they're going to do what I did. They purchased American Silver Eagles. They just said, that's the sovereign coin in my country. This is what I'm going to go after. This is what I know. And I mean, opposite in like a Hong Kong, they're after the Chinese panda. That's the coin they're going to go after. That's their flavor. They're not thinking about American Silver Eagles. They're thinking about what's the most known sovereign coin, what's going to be the most liquid. For them, it's the Chinese panda. So bear that in mind. But I think once folks start, building up a stack and they start realizing, hey, the Mexican numismatics, like, oh my God, like there's very few of those compared to like silver eagles, compared to silver maples, compared to a lot of the other sovereign counterparts. So let's focus on today's showcase piece, the 2016 Silver Libertad. And so, as I've established in the last couple of videos, we are now in that era where the big dealers, your Modern Coin Mart, your Pinehurst, your Liberty Coins, a lot of the AppMex, a lot of these big dealers, we're now in the era where they started bulk submitting Libertads to both NGC and PCGS. And so, as we're going to see in the NGC population reports, PCGS population reports, that a lot of graded coins. We're now in the era where they've graded a bunch of these as they were being released. Looking at the mintage, the 2016 by no means relative to other Libertads is a scarce one. It is near the bottom, far away from being scarce at almost 1.5 million. It's 1,437,500. So not a scarce one at all. Very readily available. We're now going to look at the NGC population report and the PCGS population report. Here we are on the NGC screen, looking at the 2016, and currently there are 3,757 total graded, with the top pop of MS70 with 1,392 of those. So very abundant coin. This is the type of the coin is when you're ordering on AppMex and they're selling random, they'll list it as random Libertad. Very high probability if you're getting the more modern version of it, you're getting a 2016. If you're getting the old or OG variety, the Gordita, you're very likely getting a 1985 when you choose to purchase a random on their website. On the PCGS side, very strange brain fart they had here. I mean, NGC has its own issues on the population report, but they have 2016 as the final line entry. Like things kind of fell out of order somewhere down this population report. So it's all the way down here at the bottom. We have a total graded population of 3,654. Top pop MS70 with 1,513. Certainly another very abundant year. And given the mintage, very, very easy to get and most likely on the cheapest side possible in terms of Libertads. So let's take a look at those comps now. Here are our 2016 Silver Libertad comps on eBay. Don't forget, I have mentioned in an old video where to hunt for Libertads. There are other platforms like Great Collections, Heritage, MA Shops. There's a bunch of places I had mentioned where they sell Libertads, and you can find them and you could see, what did auctions finish at. But eBay, for the most part, has the largest sample size, and since it has the largest sample size, you're going to have very recent comps. This becomes more important as silver surges in price, and you're starting to see that here. Looking at their latest comp, like I mentioned, very abundant Libertad, the 2016, but it went for $60. It went for $60 now because spot prices has been sustained above 50. And so the premium, even on the most abundant Libertads within the series, the premium is going to go up. So naturally, this price will go higher. We have another one here on November 10th, $65.80. Also November 10th, $65. And so this gives this was somebody bought a whole batch of them, 2016s for $1,264, and so forth. These are fractionals, and so you have an idea. Here's another one on November 7th, $59.95. So we are now starting to see, if you start comparing to older videos, let's say you go pull up my 1985 video, and we look at sold comps. Those prices were much lower then because spot was much lower then. And so as spot goes higher and the premiums IDs will be even higher, we're just going to see prices trending up even on very abundant Libertads like the 2016 and the 1985. Thanks for watching today's video. Whether you are new to collecting Libertads or you're seasoned with Libertads, I highly recommend joining LibertadCoins on Reddit. Great group of guys. A lot of folks posting in there daily, showing their mail calls, people asking questions, a lot of us providing answers, trying to help you along on your Libertad collecting journey and ensuring no one tries to rip you off. So I hope to see you guys there. Thanks again.